Hey guys and girls, it's Nathan here from the B.Invested headquarters, and today I have two of my colleagues here beside me. We've got Gail, who's our marketing manager, and Yomna from our marketing team as well. And I just got asked a question from you, and I thought I'd bring the camera straight into the boardroom and get you to ask me the question again before I answer it, because I think it's important that that everybody sort of understands who we are, what we do, what we stand for, how we operate. And I guess some of the things I say out there, I try and break down very complex situations that are put them in a simple method, but sometimes the complex situations that I talk about are very complex that I can't get out in one way. So I think it would be good for round table. So hit me up and I'll answer all your questions.
Yeah, so Yomna basically asked me before, does Nathan honestly believe that now is a good time to invest in property, or are we just saying that for clients?
Yeah.
And if that's the case, why do we get information from you that is so conflicting sometimes?
Yeah. And the short answer, it is when you're investing in a property, for me personally, I like to, and I always have, looked at the whole playing field of what we're working with. So not just the property market, but the whole outer market. So probably the last 12 to 24 months, I know some people think that I've gone crazy and I've got like this big beard that I grew, and has he lost his mind? Is he being like Jim Carrey? And that was just for a bet, as we know in the office. I had a bet for why I did that, or a dare. And for me, I wanted to explain to people, because the market is bigger than the market, where people say, every 7 years there's a cycle and it's just a normal cycle, because that's not, how I built my portfolio. I wanted to know fundamentally what is the the chessboard that I'm playing on, and how does property fit into that chessboard, and how can I use it to my advantage. And in September 2016, I know that I came along to some of my mates, and I've got the WhatsApp message threads to remind everybody about. But I realised that the market was going to change, and I started talking about it because no one else would actually face the deep questions of it, because they all have a vested interest to flog off property out there, and a vested interest to pump the market up, etc. But as we know, I quit my job in the GFC. The market has considerably changed since the GFC, but fundamentally what we are sitting at the moment is a market that was very similar to pre-GFC. And GFC was an awesome time because there was lots of things that had changed in the marketplace at that period of time. So for me, what is my belief of the property market at the moment? Do I believe this, you should still be buying, whatever? I think some people should not be buying, because they're probably too stuffed themselves up over the years by buying stuff that they shouldn't have. But in general, this is the best time for me to be buying. And for me personally, I just signed a contract 2 weekends ago on a property that I'm buying in Sydney, and I know if I'm buying a property that's 150 grand lower than what it would have sold for going back 2 years ago, I'm making money on that deal. Looking at my goals for 2019, obviously it's the 13th of November today. So 2019, I want to purchase, as one of my personal goals, another 30 foundation sort of properties that we buy for our clients. And what we need to remember is that every market cycle is very different. What we've seen for the last 10 years is not a normal market cycle. And what drives the market to go to where it is based on the monetary supply that's out there. So in short, to answer your question, going back in 2007, we saw the GFC arrive. When the GFC arrived, there was a few years of bit of pain before that. Prices were volatile and stuff like that. But from 2007, we saw interest rates go from the RBA at 7.25% all the way down to 3%. That allowed for properties to A, become positive cash flow, B, better than shares. Because when you understand the stock market, like we're looking at the stock market, I predicted some very key dates: the 10th of October, the 11th of November, which fell on a Saturday, which put it over to the Monday, which is the 12th of November. We're seeing specific dates, and that's liquidity coming out of the marketplace. And we're seeing a lot of volatility in these markets. And as we start seeing more volatility in these markets, those markets will collapse. And a lot of people that are trading in these sort of markets will get burnt, and they'll look for a safe haven. And when we see times of uncertainty and times of unrest, the government, the central banks, the media try to control it, but you have the central banks and the governments actually coming to try and stimulate the economy. So what I'm very excited about is I'm seeing all this volatility in a global market, and there will be money coming into the property market. The people that are out there at the moment that are scared, they're not taking action on property or whatever, I'm using all of the media that's out there that's negative to try and get the bargains within the marketplace. I'd rather be buying a property in November 2018 and moving through 2019 due to the fact that I'm picking them up cheaper than what I was back in 2015. 2015, it's like, oh, can I please buy that property? Oh, it's gone up by $50,000. Okay, I'll take it at that price. Like, there was stupid stuff that was happening in that marketplace. In this marketplace, if you're picking up something that's 50 grand or 100 grand cheaper than what it was selling for 12, 24 months ago, that's money that you don't have to pay for the property. Like, it's cheaper. You're putting that profit in your pocket. And you've got to look at how long would it take me to save that 50 grand or save that 100 grand. And that's the opportunity within itself, because when the market swings around, you're not going to find these bargains anymore. And if I didn't do the actions that I did between 2003 and 2007, it was only a period of 4 years from my first property, pushing myself to get into the market and keep pushing forward, I wouldn't have been in a position when stimulus came in the market, when the GFC came into the market and the property market took off. I wouldn't have had my treasure chest of assets, because we've got a monetary system which is dying, and a lot of people don't know how money works, and I probably won't try and complicate things on this video, but the monetary system's dying. If we look at the cost of paddle pops, Big Mac meals, any sort of food and groceries, your shopping basket every week, in the last decade it's gone up in value. I, as an investor, I like to own assets. I don't like to have money in my bank account, and this is an opportunity. When you have money in your bank account, you can go out there and take advantage of the situation, but also remembering that not every market runs in the same cycle. If we look at 2003 to 2007, Sydney was very flat, but areas like Queensland, Northern Territory, Perth, those markets were taking off. And there's counter-cyclical markets. So you've got the game board that's here, and then you've got the map of Australia, and there's macro markets and micro markets. And it's important for investors to look for those opportunities, because if you can set yourself up in this period of time, you can set yourself up for life. And it's so.
Why do you think there's such a difference between what you're saying then and what's being said in the media?
It's an interesting one, because the media like having me on TV to sell their message. When I go on the media, what we need to remember is that the media have advertisers that pay for all their jobs. The people that actually pay for that are lobbyist groups that have vested interests that are puppets on there. We've got all the advertisers that are corporations which are traded on the stock exchange. So they need to make sure that that their advertisers are being protected. They don't want to put fear in the marketplace and say, oh, the stock market's stuffed or the property market's stuffed or whatever the case may be, because we have a thing called trickle-down economics, which in the GFC, the only reason why the property market went up is that there was a lot of stimulus that was printed, like money that was printed that was just free money out there that they threw in the marketplace, and it trickled down through the market. If we look at the corporations that are out there, if we start saying things are bad, spending stops, we start going to a deflationary cycle. I have no vested interest in this. I just like sharing my own personal views of how I see it and how I have made those decisions through every year of my investing for the last 15 years. If we look at these people on TV, they've all got a hedge fund to protect or a corporation to save. You never see any property organisation saying the market's crap, this is going to happen or that's going to happen, because they need to sell their units, they need to sell their loans, they need to sell whatever. And I think there's a lot of misinformation out there. So I've been touted as a spruiker over all these years, which I don't care. I'm being touted as a crazy guy that's saying that it's a tinfoil hat. I've never worn a tinfoil hat on a YouTube video. I just like to address things as they are for being real. and there's opportunities in these markets. And what I fear is that people won't see these opportunities because they're too brainwashed and indoctrinated and too caught up into, the guy that was bald on TV this morning. When I was a kid, I used to watch Aggro's Cartoon Connection, reading between the lines, guys, and generally, it's late at night, it's the afternoon now, the sun's setting, in the morning the sun rises, and, there's people out there that are in these, TV stations as avatars that, back in 2008, 2007, 2008, I've seen these finance experts which have said, sell your house and buy some shares. And, within 2 weeks of that, the stock market tumbled by about 40%. And if you had to put all your assets and all your net worth into the position, you would have seen a loss to your position of like 40%. It's important to understand those markets because, there's fundamental signs that are there. And as I always say, like poor people focus on how much do you earn per hour, how much income do you have, how much savings do you have, where wealthy people really look at their net worth position, their cash flow, their assets, their liabilities, and have a statement that they can work from that. And as an investor myself, I like to look at the fact of assets and what sort of assets I can take through a market cycle. When the stock markets start collapsing, where's that money go? A lot of it will be gobbled up and the liquidity will be wound back. That was printed back in 2007, 2008, and a few times over the last decade. But a lot of that money will be parked on the sidelines looking for another place to go, as well as a new wash of money that gets stimulated in the market. And this is the stuff that they won't tell you on TV. And as always, I never expect anyone to listen or believe what I have to say. Time will tell and common sense will prevail. But, it's literal numbers that, these people that are in the media with vested interests aren't going to put their neck on the line and say what it is because they physically can't, because the people paying their salaries are the ones that are, forcing the market to be whatever it is. But I just say it as it is because, I've put my credibility on the line. I called the GFD in late 2017. A lot of people thought I was crazy. I put my reputation on the line. People thought that what's happening with Nathan, but we can see it's evident now. And looking at the market, it's a very interesting time. People shouldn't be scared by it. They should understand how the chessboard works and where the pieces move on that chessboard, and then look at the opportunities for themselves to be able to take advantage of that market. I'm sitting here talking very negative about stocks and shares and paper assets at the moment. And I have an investment firm, right? We have at B.Invested, we're an investment firm. We have fund managers and we have financial advisors, and people can come to us to invest in the shares. And I'm sitting here pretty negative against shares, right? And it's a testament to this fact that we actually walk by what we do. But there will be a point where I'll have my cash that I will put into stocks and shares and bonds and whatnot. But at this point in time, it's too volatile. I see the whole market, every market out there globally is a wash of fiat currency. I see that there's a liquidity crisis where that's getting sucked out. We're going to see a crisis, which we're in the eye of the storm at the moment. And then after that, I see a lot more money going in and all the assets being pumped back up again. And if you can understand how that works and be ready to take advantage of those situations, most people are out there whinging and complaining and pointing fingers and all that sort of stuff. This is a time for smart money to be made, and in these sort of markets, the money goes from the weak hands to the strong hands. And I like to consider that I've got strong hands, I've got big hands like dinner plates. People always get surprised when I shake their hand, like, wow, you've got a big hand, right? And I want to catch all these things out of the property market as the markets, people get scared out there. So the three things that I always talk about: below market value, upside for capital growth, strong cash flow. People have been trying to think they're so cool by buying a property that's on a duplex site, chop it up, build a house. There's a lot of volatility and a lot of risk that's surrounding that. I think that the markets that will be most protected, if we see the market start collapsing from the top, You know, a $5 million property has a lot to fall down to zero. $3 million property does, a $2 million or $1 million property. But the stuff at the 200 grand, the 300 grand, the 400,000, 500,000, if you're buying well-priced properties that are in strong markets, those people are going to need to go somewhere. There'll be a pent-up demand at that bottom end, so you're actually isolating yourself by buying the right properties and having the right strategy in the portfolio. So, yeah.
So I've been here a while now.
Yeah.
And we've had multiple conversations about a massive shift in mindset in our audience. Some of the comments that we see on social media, people are angry, people are scared, people are very aggravated by the idea of property now, whereas when I started, people were in love with property. Do you think people have fallen out of love with property, and why do you think there's been such a shift in mindset?
I don't have the answer for that one. One thing though that I remember, like, I'm probably fortunate because I've got a fairly good memory. I remember a lot of things. But a lot of people forget what happened 6 months, 12 months, 3 years, 5 years, 10 years ago. And the fundamentals they're all off the table, all the fundamentals for all the financial markets. We're in uncharted territories at the moment. And people like to blame. People are thinking this is some sort of bubble or whatever the case may be, because they're being brainwashed by the media. They've got agendas. You've got who's going to win, Liberal or Labor? They don't like getting into politics, but they're all a bunch of commies, right? And when you see the TV, and they have got their vested interest, they're trying to push these rules and regulations and trying to make us a totalitarian fascist society in short. And what they're doing is that they're getting people, divide and conquer, right? It's creating that void. I love volatile markets. As an investor myself, I like to see the volatility so I can take advantage of those situations. And the people that do control the media do control the minds and the hearts of people that are out there. And I think that a lot of people focus on the fact of, is it going to be Bill Shorten or is it going to be whatever Liberal Prime Minister is going to be next week or whatever. They're not going to change anything, right? It's the fundamentals of liquidity. The reason why people are feeling poorer is not because of an investor. People think it's a greedy investor or it's this or the house prices are going to pop or whatever. The fundamentals of money, how money works, is the game board of what we're playing on, and that's the fundamentals. I know people would want to buy property. If you're watching this video, you've probably got an interest in property. You probably want to buy a property. We're all sitting here at the table. Give me some finance, I'll buy some property. Give me access to the funding, I'll take over the property. And there's buyers out there, but they just can't get access to that. And that's because we're in a liquidity tightening phase at the moment. It's called quantitative tightening for the technical term out there. We've spent 10 years of quantitative easing. And people aren't financially educated. Their financial IQs from the cartoon station I used to watch when I was a kid or whatever the case may be. And I don't get my marriage advice from Married at First Sight, and I don't get my etiquette from Kim Kardashian, right? Yeah. And people, get so ingrained in this, and it's like you need to understand how the whole platform works. And I think people are just, going with the flow. Oh, it's too hard to get a property. People were optimistic. Oh, you're making lots of money. Let's go buy the property. The fundamental thing that changed in 2016, September 2016, is that's when quantitative easing stopped. The end of 2017, in November, they started quantitative tightening, which they're taking all this money out of the system. And the banks don't have money, they don't have the liquidity, corporations don't have enough liquidity, and governments don't have liquidity. All we have to do is go and look at, and I encourage people to do this, go and look at the currencies this year. You look at whether it's the Aussie dollar, the Brazilian real, the Turkish lira, the Argentina, whatever country you want to look at, the Canadian dollar, the euro, they're all falling, and they all started in January this year from quantitative tightening. And this is going to cause the GFD, and there's going to be needed, the only way out of it, which has happened throughout history within these liquidity times, is for people to inject, the central banks around the world to inject more money in the system. And then as you inject more money in the system, there's more money flowing through with trickle-down economics, putting more money into the market for someone to buy a property, and liquidity flows cheap, easy, and Yeah.
So we live in an age where, like, we've got the internet, and any bit of information that we want is pretty much there at our fingertips. Why do you think people go along with what the media is saying then, instead of going out and just finding out the answer themselves? Because that's what you do. You research, right?
I
So
research.
why don't people? Why do you think people are so quick to kind of go, "Oh, Nathan's wrong," rather than go out and actually look into whether or not why you're saying what you're saying?
Because it's easier to do that. I don't have the exact answer to it, but I think that people look at the news, they look at the media, they like to write bad comments on YouTube, which I love, guys, because as you're pushing the dislike button, you know, my marketing team here says I'm a nightmare from that front, but, you know, keep hitting the dislike buttons if that's what you're trying to do. If people are commenting with bad stuff on the bottom of the YouTube video, they're going to be sitting there writing on it. It's going to push the ranking up on it. You know, at the end of the day, people may not like what I have to say, but I'm saying the facts. I'm saying what I see and how I walk in my life to make my decisions to get to where I want to be. And it's inclined for the people. You know, at the end of the day, I don't want to make everyone happy. I do. I'll try my best by making these videos and sharing my knowledge. But I still need tenants. I still need people that are going to, you know, sell me their properties cheap. I'd love for everyone to be scared and sell me cheap properties, right? I'll just go collect all your assets, and that's how I'll become wealthy, right? And, you know, that's what we do for our investors and as a business and whatnot. But I think that it's too easy to sit there, and people are too indoctrinated via this media that's out there that's telling them that, oh, this is what's happening, oh, it must be right, you know. And it's like, all you have to, no one questions what's coming out there. No one's questioning what's on the media or the underpinning and the supporting reasons to why certain views are the agenda. There's too many hidden agendas out there, and people are getting sucked into it. But, you know, I've seen, 15 years as an investor, I've seen many different markets. I've seen markets very similar today. I've seen high risk markets. The people that like to hate on me out there, Nathan's going to go broke, I can't wait till this bubble pops, right? And what those people don't realise is that, I've been investing for 15 years, buying houses in Sydney at 110, 120, 130, 150 grand, and I still owe, 50 grand, 80 grand, 100 grand on those properties, and they're worth $500,000, right? And that's because the monetary system is changing, and it's on its last legs, and the opportunities exist. So when I do talk about these problems that will arise out there, people can either view in and do some research. I encourage people, don't just trust anything I have to say. Go do your own research. It's not like, oh, Nathan's saying the red pill and it's the truth. Like, people should, not question it, should question and not obey without questioning. They should go out there and sort of research and do their own fact checking from every angle, and not trust me. Don't trust anyone, but look at what's out there, because the market is changing. We are going to see a financial calamity, and it's quite evident now that we're on the eve of it. And what can you do to take advantage of that situation? If I didn't do the tasks of buying the properties back when no one wanted the properties back in the day, I wouldn't have been sitting there with 20 odd properties that doubled within a period of 2 years, that I could go and take that equity and go and buy more of them. It's just a game of Monopoly. If you understand the parameters of the game that you're in, you can become ahead of that. And the markets that are out there, I've seen some markets which are in capital cities, which were like 200 grand, that have come down. If you think that 60 Minutes or whatever it was that said the market's going to drop by 20%, 40%, 80%, like, there's a lot more vested interest, whether it be the government, whether it be the banking system, whether it be the taxation system. They've got stronger interests in the market survival than what any of us that are watching, or me or you or whatever. And if you think the market's going to collapse at high, well, then make a decision accordingly, right? I'm sure I'll be able to rent you a property for that. And during the time that we're seeing at the moment, what we saw pre-GFC is we saw rents increase, because there's not enough housing being built to keep up with demand. There's not enough fundamentals. They're all off the table. The fundamentals are off the table, and we see the rents increase, that means that all my properties are going to have higher rents, and it's going to mean more money for me and more opportunity to buy more properties off people that are scared selling their properties cheap. But if we look at the market at the moment, there's areas like the Sydney market, it's been cooked for a while, right? Doesn't mean there's no opportunities, right? We know that we went out there and bought land and built houses, so brand new houses on land where they're worth 750, 800, we picked them up for 550, 600. At the same time, there's crappy old houses in the back of the worst suburb in Sydney. They're selling for 550, and that's the cheapest entry point for a house. There's half graffiti on, half burnt, and full of termites. There's opportunities in markets to make money. It doesn't matter if it's going up, down, or sideways. And the first cracks that we saw in the market were where the developers were getting themselves into trouble from finance, and we were buying the land cheap. And in the market in 2018, we've been picking up those markets which are investor areas where they've been hit and impacted, and you can pick up a property that was selling for 200 for 150. It's already come down 25% in some areas. You go and pick it up for 150, it's renting for 250 or 300 bucks per week. It's probably worth 170, 180, but it's being oversold. You find the occasional vendor that's bleeding and distressed, and you just come in like an eagle and you pick the eyeballs out and fly away. And that's the market. People need to realise that instead of having pieces of plastic with dead criminals printed on, which we call money, you can actually, oh, you like sitting there going, don't say this, Nathan.
You can't put it on Nathan, you just can't.
The reality is that I want to own assets, things of value, because I realise that assets buy me options in life, options of choices, things that I can do in order to live life on my terms. And I think for most people that are wealthy from that aspect, they're accumulating assets regularly and they're buying assets in line with their goals. And those assets appreciate in value, or they do certain tasks, and then that gives you options. So I know in any day, in whatever problem I get into, I've got 1,000,001 different options to get out of, out of trouble. So there's options that you're buying yourself choices. All I need to do is take $2 million worth of my money and put it in a bank account if I was that inclined. But I know if I put my $2 million in the bank account, it's going to buy me less in 6 months' time and 12 months' time and 24 months' time, as inflation's making people poorer and poorer. But all I have to do is put $2 million in a bank account from just selling off a few properties. $2 million divided by 40 is $50,000. The average wage in Australia is 50 grand. 50 grand over 40 years, which is the working life of someone, right? I put that aside. I've got the rest of my life. All I've done is bought options of doing what I want, when I want, how I want. Our investors over the years have done those choices, those decisions, in order to buy themselves options to let the spouse finish up work so they can spend time with the children. Like 20 years ago, 30 years ago, the wife got to sit home with the child, or whatever the case may be, and babysit and take care or whatever, and you had a family unit. And today, the husband and the wife, it doesn't matter if it's a guy or the girl or whatever, whoever wants to work, whoever doesn't want to work, but now both partners don't get a chance to even spend time with their children because they've got to send them off to daycare, so they're both enslaved, having to pay their mortgage and stuff like that. And options to spend time with your children, options to travel if you're that way inclined, options to go and race cars if you're that way inclined, and buying assets that are going to accumulate in value. And there's always opportunities out there. As I said, I will go into the stock market and buy a lot of shares. Right? I guarantee the people that I'll even make some videos on that at the time when it happens, right? But at the moment it's too overvalued and it's too risky. That money is going to go somewhere. When the markets implode, what's going to happen with it? The interest rates are going to go down. If the interest rates are so great in Australia, we had such a great economy, the interest rates will be greater than 1.5%. Right? They've been there for 27 months. They haven't been able to increase them. If they increase the interest rates by 0.25% or 0.5%, we're going to see the corporations go broke. We're going to see businesses go broke. We're going to see the stock market implode. And that's why they're still at this price. All this APRA stuff, everything that's being put on the table to make things harder for people to invest, these things are just there as measures, and once they remove them, liquidity is going to flow around these markets again. And I'd rather be picking stuff up on the Boxing Day sale than 2 days before Christmas, and everyone focus on buying before Christmas when you can go buy it at the Boxing Day sale cheap.
Yeah.
It's fucking Boxing Day, right? That's why I'm bullish on property, but I don't like, I know sometimes my messages are, not clear or whatever, because I'm trying to download so much info for people to be able to use that information to, improve their position. Because if people don't realise this game board that they're on, they're going to be trapped. They're going to be trapped inside it, and you want to be outside it so you can control the pieces on the chess set. So, yeah.
I just wanted to ask you, so is like Sydney market on realestate.com,
Yeah.
the market's going down. Like you can see that the property prices have gone down.
Yeah.
So why would you buy today
Yeah.
if you know that maybe tomorrow the price is going to down? Like, for example, like knowing tomorrow's Boxing Day. Why
Yeah.
would you go shopping today if tomorrow's Boxing Day when you know everything's going to go down?
Yeah, well, you could know that tomorrow's Boxing Day, but unfortunately with the markets, we've seen volatility in the Dow Jones, in the ASX, in the monetary markets, in the bond markets, and we're seeing more and more volatility as time goes on, and one day that's going to implode. We don't know what day it's going to implode.
Yeah.
We can't guess that, right? The day that those things implode, there's going to be a hell of a lot of stimulus coming into the marketplace. When stimulus comes into the market, that's going to, push prices of things up. There's going to be inflation. We're going through a deflationary pressure, and we're going to head into an inflationary pressure. The reality is, if you're going to build a property portfolio and you want 10 properties, you can't buy 10 properties overnight.
Yeah.
We don't know where the bottom of the market is. Plus, the properties that we're buying into aren't at this top end of the market. We're not buying $2 million properties, $3 million, $4 million, $5 million. We're buying the 100,000, 200,000, 300,000, 400,000, 500,000. If people start losing these sort of properties, and there's a lot of volatility at the top end of town, when the stock markets tank and businesses go out of business and stuff like that, those people need to downsize, right? You're going to see more Porsches for sale cheaper and stuff like that. But the Toyota Camrys that are out there, and the everyday family cars and the vehicles and the vessels that are going to be everybody needs, the basics, they're not going to drop down to nothing, right? And with the properties, how are you going to see a 300,000 or a 400,000? They might come off a little bit, but there's people that are scared out there. People that are like, oh no, the sky's falling in, and they're the ones that I want to know. And if the people are scared and they want to give their properties away cheap, I'm happy to hear from you as well. But it's a fact, right? I can see you going like, please, Nathan, don't say this stuff, right? But people will get scared, and people will make stupid decisions, and there will be opportunities to go and like peck the eyeballs out of someone that's like making silly decisions, and that's what we're here for. That's what I do when I invest in the properties. I make no complaints or qualms about it. I'm open about it, right? That's what we do for our clients, is pick the eyes out of the market and get into the deals. The big end of town, the top end of property prices are the ones that I'm most concerned about. They have a lot further to fall. You can see a $3 million property drop to $2 million, lose $1 million off it, there's 30%, possibly, right? You're not going to see a $300,000 property, someone asking, I'll give you $700,000 to take it away, right? It might drop from $300,000 to $330 to $300, or $300 to $270, or $260, or $280. At the same token, you might also see that market take off, and back in the GFC, that market, the boom that we just saw over the last 10 years, I remember it, right? I remember when that boom started. I remember going out to Mount Druitt Workers Club, right? And there was auctions for properties, and I saw people growing from 20 people that rock up to an auction to 50 people to 100 people to 200 people, to the point where it's like, I'm not even turning up to the auctions anymore because there's too many people fighting over these things. The boom started from out west and headed east last time. The boom started at the cheaper end of town and went to the expensive end of town. And I see the same thing that will happen in this market cycle. We're starting, everyone thinks the blue chip, the most expensive properties. If your properties are below market value, then you can weather the storm, as I said. Like the properties that we bought, $550, $600 for a brand new house of land that rent for $500-$600 a week, they're fairly neutral cash flow, right? They're worth $600, $700, $800,000. We're picking up for $600, worth $800. They drop all the way down to $600. You're still not losing money. You're still ahead of the game. They end up at 700,000. You're still making 100,000 even in a crap market. And the reason why I'm using that as an example is we just settled some of our land for our clients. They're into land for like 280, 290. They're into the build for 280, 290. They're into it for like 560, 570. And the valuations are coming back from the banks on the builds and the completed products at 700,000 in a crap market. The banks are conservative. So the opportunities, like we took advantage of the developers, right, by doing those deals. We weren't taking advantage of mums and dads, right?
Yeah.
Mums and dads are going to make stupid decisions right now. And that's the opportunities that are out there. Either we can help you by just telling you the facts, telling you the truth, or we can help you by buying the properties off you cheap. Either way, right?
Yeah.
But yeah, if the GFD arrives, which it has, I believe, I'm very confident on that, and I put all my credibility on the line. I want everyone to know that I put my credibility on the line, right? You thought I was a dickhead, you thought I'd gone crazy, not you guys, because you probably did too. But everyone out there was like, it's not going to happen, stop being negative. And it's like, how can I be a property spruiker and I can be negative, right? I'm just telling the facts, right?
Yeah.
I'm telling the facts, and I believe, as a person, that if I tell people the facts, they get protected, they take advantage, they do the right thing, my advice has helped them, then I'm going to get kudos and people are going to go, okay, cool. I want to be a part of your team and your business and all that sort of stuff. So just do the right thing. I don't need to sell snake oil like they do on TV and like the corporations or organisations do. But the reality of it is that when that crash does occur, right, and we start seeing the stock prices fall, the corporations going bankrupt. In 2008, we saw corporations and companies going bankrupt. In 2018, we're seeing countries going bankrupt and currencies dying, which is very different. It's very different to the GFC. And this time it's going to need a hell of a lot more stimulus. 50 grand wage could be 200 grand by the end of this, right, in 10 years. But then a Big Mac meal is going to be $100 and a cheeseburger is going to be $50. And
It's all relative.
It's all relative, but debt becomes irrelevant with inflation. If someone can understand that, that the more debt you have, the cheaper it becomes because you can pay it off with tomorrow's dollars. And that's the reason why I like property as a vehicle. And this is a time where it's on sale. It's like, it is harder to get finance. It is harder to acquire the properties. But in this market, that's the opportunity, right? Like when no one else can do it, you don't want to go and buy a can of Coke at the Easter show. It's going to be like $10 for a bottle of Coke because you can't go out, you can't get it from anywhere else. You're in a trap market. That was 2015. I'm down at Coles and Woolworths at the moment picking up bottles of Coke for 40 cents, 60 cents, 80 cents, $1. That's the opportunity. And, if they do start putting stimulus in the market in 6 months' time, 12 months' time, 24 months' time, you've only got a window of 12 months, 24 months, 36 months to build your portfolio. You don't know which day it's going to start returning and prices heading up because you don't know when they're going to put stimulus in. So all I know is that they're cheap. If they go down 5%, 10%, 15%, people are trying to pick the top of the market, right? People are trying to pick the bottom of the market. People thought that, I remember seeing on the TV, and going back to the vested interest and the media and all these people, I was going to say clowns, but people that are out there giving advice, and people were saying that the property market was going to implode in 2008 and 2009 and 2010. Professors selling their houses for cheap because they're going, it's going to drop by 40%. They missed out on the biggest boom in history, right? All I want to know is the parameters of the board that I'm working on. Once you can master that, you can sit out there and start moving things around. And I encourage everybody to educate themselves, like whether it's from researching monetary policy, boring stuff, whatever. That's how I get my knowledge. And we know that I spend a great deal of time. I only sleep like 3-4 hours a day because I'm researching random stuff.
I was getting emails from you at 3:10 this morning.
Yeah, I was emailing until 6 a.m. I went to bed till about 9 a.m. and then I woke up and came in the office for, it's the opportunities are there. There is cracks in the financial system. Should you steer clear of doing anything? Because I think out of this cycle, there'll be some people and there'll be some probably haters that are going to write negative comments on this part of my commentary, is that the biggest losers will be savers and people with cash in their bank. If you're too over leveraged with stupid stuff, you'll get into trouble. You need to sort out your position pronto. If you're too under leveraged, if you've got all this money in the bank, your purchasing power is going to get eroded after this. Having some cash there and capital to take advantage of opportunities, whether it be in property or whatever sort of markets you want to invest into. As I said, I'm going to be investing in the shares in the future because I see the opportunity when I'm getting them a 50% discount. You know, it was only like last week, and I'm not encouraging anyone to buy this. AMP went down by like 25% in a day, and then another 10% in a day. If you had your money invested in that, you're getting wiped out. Imagine when all the shares and all the stocks are going down at values like that. People pull their money out of fear. Then they see on the news, the property market's climbing again. They're all going to jump in, and it's going to, But I've heard very similar things in the past, and all I'm to do is to share my views and share my thoughts on it, and for other people to be able to gain the knowledge to walk in the same sort of shoes that I do, or thongs that I walk into where I'm going and how I'm going to take advantage of this market. And it's the education is important, but that's why I try and throw out so much free knowledge for people to protect themselves, because I know if I can help you, whether it's a day too early, a month too early, a year too early, prepare for this. It's better than being one day too late, because you're trapped. And from that, if I help you get yourself in the right position, I know I'm going to have friends for life, and a lot of gratitude around that. So that's why I talk about that. But I don't want people getting misconstrued by thinking that you should sell up, because otherwise I'd be selling all my properties, right? And I'm in an accumulation phase, and I'm out there buying more property.
Does that answer your question?
Yeah.
Yeah.
And more.
All right, guys. Well, thanks for asking me questions, and I'm going to try and make some more of these videos. When people come up to me in my office, ask me stuff, I'm going to pull them in and put them on the video and answer the question for them. So thanks, guys.